Hello, good morning. It's Monday the 24th. I'm FX Blue and this is the market brief. So the MPC, they're due to meet again next week and it's very likely that they'll vote to raise interest rates for the second time in 2 months. It looks rather like they're playing catch up now after having adopted a fairly relaxed attitude to rising inflation in H2 last year. Bailey's gang were firmly on team transitory, fairly certain that inflation would fade as soon as the economy was fully open again. That said, of course, Bailey himself was fairly certain of a November rate hike, only for his colleagues to vote to the contrary and maintain rates at 0.1%. Yes, Omicron created plenty of uncertainty back then, but now it looks likely that we're in for 3 or maybe even 4 rate hikes this year, as once again we emerge from the COVID restrictions. Thankfully, this time around it seems like the Omicron effect was not as bad as originally feared for the economy. Services output will be published later this morning and the January reading is expected to show a continued healthy increase, confirming slow and steady economic recovery in the UK. In the market, sterling stayed in a pretty steady trading range against the dollar last week. We saw a high of 136.90, but this morning we open around 135.45. Over in the US, the first Fed meeting of 2022 is expected to stick to the script. They're likely to continue tapering the additional economic support, but ultimately they're likely to maintain interest rates at 0.25%. JP Morgan was on over the weekend. They issued a report that predicts a slowdown in economic activity over the next few months, and they suggest that the Fed needs their action to start delivering results. Speculation is growing that the number of forecasted rate hikes predicted in this current cycle may need to be more than previously forecast. The current consensus is for 4 hikes this year, but this could mean that could stretch into maybe 2 or 3 more rate hikes in 2023. That's if inflation hangs around for longer than planned. Employment numbers remain a concern, but no doubt this is being affected by the continuing Omicron cases. Weekly jobless claims continue to rise after that hit a low of around 200,000 a couple of weeks back, as workers are reportedly concerned about the infection levels at the workplace. Non-farm payrolls saw an average of just over 500,000 new jobs reported month on month in H2 last year, but the past 2 readings have been less than half of that average, so it suggests a significant slowdown in job creation in Q4 last year. And no doubt that is a worrying trend for the Fed, and it may put them in a tricky situation when they're looking to balance inflation while potentially needing to stimulate the jobs market again. Meanwhile, in the market, the dollar index touched a high of 95.85 last week, and euro dollar starts the new week from around 113.20. That's it from me. Hope you have a great week ahead. Do join me again tomorrow.
If you do not have a clue, then just tweet through and ask FX Blue.